Hello, everyone. I'd like to welcome you to the annual general meeting. My name is Hilary Brown, and I am the chair of the Municipal Pension Board of Trustees. I've been a board member since 2012. As we begin, I would like to acknowledge that the province of British Columbia is located on the homelands of 203 distinct Indigenous nations and cultures, with more than 30 different Indigenous languages and close to 60 unique dialects spoken in the province. These people have been the stewards of the land since time immemorial. I would also like to offer my respect to all the elders who have gone before us and to all Canadians who are on the journey of reconciliation. We ask all participants to reflect, acknowledge, and honor in their own way the First Nation land on which they live, work, and play. I would also like to acknowledge that this is the first time we've hosted this meeting virtually. With the current situation of the COVID pandemic, we are not able to hold this meeting in person. However, I am excited that we can still connect online. I appreciate your patience and flexibility if you experience any technical issues. At this time, I'd also like to thank all BCers for helping control the spread of the virus. As well, I'd like to extend my most sincere sympathies to those who have lost friends and families to this virus. While trustees are not able to be physically present with members today, many trustees are participating online in this virtual meeting. I would like to welcome everyone joining us online throughout the province. We have a full agenda ahead. First, we will have financial highlights from last year. Then we will give an update on our review of the post-retirement group benefits program. Following that, we will present information on the planned investments. Then we will talk about activities in the coming year. We will close the day by answering your questions in the Q&A session. Before we begin, I'd like to provide a few instructions. For the Q&A session, please enter your question in the question box on the bottom right of your screen. You can also email your question to agm@pensionsbc.ca. Again, that is agm@pensionsbc.ca. If you have a personal pension question, please sign into or register for My Account at myaccount.pensionsbc.ca. Again, myaccount.pensionsbc.ca. Look for the envelope icon on the top right of the page to send in a question. If you have comments you'd like to share about the AGM, please send an email to mpbt@pensionsbc.ca. That is mpbt@pensionsbc.ca. I'd like to make a special note that the 2019 annual report is available on the plan website. We published this report in mid-August. On the screen, you will see the organizations that appoint trustees. I would like to say thank you to the trustees for your service and thank you for being here online today. The chart on the screen shows you how our trustees support the plan. It is a visual of where we fit into the plan's organizational structure. The plan is a joint trusteeship. This means that representatives of both plan employers and plan members share management of the pension plan. These responsibilities include administering the plan and investing the assets of the pension fund. The plan employer partner together is the Government of BC and the Union of BC Municipalities. The plan member partner is the Municipal Employees Pension Committee. I would like to mention that the Municipal Employees Pension Committee represents a number of unions, including the British Columbia Nurses Union, the Canadian Union of Public Employees, the Health Sciences Association of British Columbia, the Hospital Employees Union, the British Columbia Police Association, the British Columbia Professional Firefighters Association, and other unionized plan members. The plan partners and other appointing authorities appoint primary and alternate trustees to the board. We work closely with a number of agents and service providers. There are several of them that have representatives participating online today, and I will introduce them to you now. For the BC Pension Corporation, we have Aaron Walker-Duncan, Vice President of the Board and Communications Services. If you have a personal pension question, I invite you to contact the plan through my account, as I mentioned earlier. Representing BCI today is Gordon Fife, CEO and CIO. For Eckler Limited, our plan actuary, Richard Border, is here. Eckler provides actuarial services for the plan. For Pacific Blue Cross, Lisa Muir, Senior Vice President and Chief Operating Officer, is here. ZLC and Cubic Health are our benefit advisors. Representing ZLC today are John McGrath and Dan Eisner. But most important, I welcome all of you, union and employer representatives and our members. You are the reason we are here today. For Twitter users out there, follow us at MyBCMPP. Once again, here is our agenda, and now it's time to get started. Gary Yee will give us the financial highlights. Gary is the Vice Chair of the Board. He's been a board member since 2014. I'll pass the virtual mic over. Please welcome Gary Yee.
Thank you, Hilary. Good morning, everyone. Today I'm going to share with you the most recent planned financial highlights. It's important to remember the board's first pension security goal is ensuring lifetime pensions. This is the commitment the board makes to every member who contributes to the plan. Once a month, pensions are paid to retirees or, depending on the option they choose at retirement, to their beneficiaries. We're very happy to report that the plan is strong and secure, and our good governance is focused on keeping it sustainable. It's important we trustees take a long-term view. This is fundamental to growing and protecting your pension contributions and the value of the plan's funds. Here are some ways we do that. The plan allows you and your employer to work together to build your future pension. Every time you contribute to the pension, your employer contributes too. You can count on the board to fulfill its duty to act in the best financial interests of our plan members. We have valuation reports that examine the funds going into and out of the plan. These reports also look at demographics, investment, and economic factors that affect the plan. All of this information helps the board make necessary adjustments. Plan partners and the board work together to oversee the plan. Lastly, trustees make decisions responsibly and carefully, from investment strategies to risk management. It's worth refreshing ourselves about how the plan pension life cycle works. The starting point is when you and your employer contributes to the plan with each paycheck. These contributions are invested. The investment becomes a significant part of your pension. Approximately 75% of your pension you receive in retirement comes from investment returns. It's important to talk about investment growth. The plan has a Statement of Investment Policies and Procedures, or SIP. The SIP sets investment guidelines and direction for BCI, our investment agent. BCI manage the investments, and we, the board, monitor progress in two ways. One, by comparing it to market benchmarks, and two, by measuring against our investment return target. For 2019, you'll see our investment return was 12.5%, underperforming the benchmark of 13.2%. Although the plan did not meet benchmark, the market value of the plan's investment increased from $53.0 billion in 2018 to $59.4 billion in 2019. The board also looks beyond the current year's return. The investment return assumption is 6.25%. As you see on the slide, the 6.5% is the investment return target. While annual investment returns varies, this is a figure we measure our return against over the long term. The plan's performance over the last 10 years can help us with the long-term view. The 10-year annualized return is 8.9%, beating the investment benchmark of 7.7%. Meeting the return assumption is what allows the board to meet the pension promise to ensure lifetime pensions. These long-term results are important. We're attentive to paying pensions for today's retired members, but it's also our job to make sure the plan will be able to pay pensions for all members, including those who are new and just joining. Later in the presentation, we will discuss the impact of COVID-19 on investments. This slide provides a detailed look at the rate of return by investment categories in 2019. You can see that public equities was the primary source of returns. The underperformance of private equity might catch your eye. Private equity ended the year with a 15.2% return against a benchmark of 22.2%. This benchmark is based on public equity performance, and the stock market rally of 2019 is reflected in the 22.2% figure. The plan has a big fund to invest. These funds are pooled with other public sector pension plan funds and other investors' funds. This creates efficiencies. Because we all invest our funds through BCI, we benefit from lower fees. The plan's investment costs are less than 1% of the portfolio. By comparison, the average equity mutual fund in Canada charges fees of 2 to 3%. Costs paid out by the plan includes investment management and benefit administration fees. There are other advantages. BCI has investment opportunities available to large funds, such as direct investments in infrastructure that aren't open to individual investors. Because of the long-term view we've been talking about, the plan can make investments over a longer time frame. Finally, the plan's investments are well diversified to cushion against lower returns in any one asset category. This diversification allows the plan investments to achieve a higher return at a lower risk level relative to a smaller fund. In other words, we don't put all the plan's investment in one place. The plan's long-term asset mix policy continues to move towards real assets such as land, building, regulated utilities, and renewable resources. These assets are mostly tangible, physical investments in private markets. They typically provide reliable cash flows, grow in value, and protect against inflation while avoiding the short-term volatility of public markets. As you'll remember from the pension life cycle, pensions are paid to retirees and to their beneficiaries. Retired members and beneficiaries also have access to group coverage for extended health care and dental. Subsidies for extended health premiums are not funded by member contributions and are not guaranteed. The plan's funding policy sets limits on group benefits for retired members. A small portion of employer contribution is used in two ways. One part goes into the Inflation Adjustment Account, or IAA, from which cost of living adjustments are paid. The other part subsidizes extended health care premiums for current retirees based on their years of service. As of December 31st, 2019, the net asset available for lifetime pensions was $49.9 billion, while the net asset available for inflation was $9.5 billion. You can see that the overall size of the basic fund and IAA has grown over the years. On this slide, we show the effects that cost of living adjustments, or COLA, have on the lifetime pension. For example, if you started with $25,000 annual pension in 2000, it would have grown to $36,399 with COLA granted over 20 years. This is a 46% increase, a significant value to retired members. Effective January 1st, 2020, retired members received a COLA of 1.9%. COLA are not guaranteed. The board monitors the plan's ability to grant future COLA each year. Once it's granted, a COLA is added to a member's pension. The plan has a cap on the COLA to maintain the long-term sustainability of the fund for both current and future retired members. This is so funds are not used up faster than they can be replaced. Every 3 years, the plan independent actuary assesses the cap for the next 3 years and recommends the board adjust it if needed. So how does this all add up? At the start of 2019, the plan had $52.8 billion. At the end of the year, the plan assets reached $59.4 billion. We collected approximately $2.2 billion from contributions and gained $6.7 billion from investment returns. We paid out approximately $2.3 billion in pensions, benefits, and expenses. We can see the plan grew through contributions and investment returns. The board believes in responsible investing. Trustees and BCI assess and manage risks associated with long-term investments. This is fundamental to meeting the mandate of growing and protecting the value of the plan's funds. As part of our commitment to climate action, the board has disclosed climate-related financial information in this year's 2019 annual report. This report is available on the plan's website. The disclosure lays out our action and those of BCI as they relate to climate action. Collaborating with like-minded investors and organizations to enhance governance practices and standards is important to the board. As you may know, we are signatories to the Principles of Responsible Investment, also known as PRI. This is an international network of investors dedicated to understanding how environmental, social, and governance factors affect investments and helping investors incorporate those factors into our investment decisions. We are also a signatory to Climate Action 100+. Its goal is to improve governance on climate change, curb emissions, and strengthen climate-related financial disclosure. Close to 300 investors together have nearly $30 trillion in assets under management. The board also supports BCI as an active member of the number of initiatives, including the steering committee for the 30% Club, which advocates for companies to enhance gender diversity, and the Sustainability Accounting Standards Board, which has a mandate to promote standards of sustainability reporting. The numbers we shared with you today are based on the plan's year-end of December 31st, 2019. Since then, the world has had to face an unprecedented global health crisis with the arrival of COVID-19 with numerous social and economic impacts. While it has adversely affected financial markets around the world, it's important to remember that your plan is positioned to endure the fluctuations in the financial markets in a number of ways. First, your plan investments are broadly diversified, as I mentioned earlier, which helps lessen the impact of the current market downturn. Second, while there's no way to foresee the pandemic, BCI has anticipated a correction to the rising financial markets. The board updated the plan's strategic asset allocation, and BCI adjusted the fund's position to reduce risk, which served the plan very well during the crisis. Finally, as I mentioned, the board followed a disciplined, long-term approach. The pandemic has been a shock to the economy, and we're not expecting a quick economic recovery. The market downturn has affected the plan's investment portfolio. However, there will be an opportunity to acquire investments at a better value. As I mentioned, the plan continues to be strong and secure, and our good governance is focused on keeping it sustainable. Your pension payments does not depend on the performance of the financial markets. To meet the needs of those working and contributing, The plan has to keep adjusting to growing numbers of members receiving pensions, keep adjusting to global markets changes and uncertainties, and keep protecting the sustainability of the plan for all members. The plan's more than 360,000 members are incredibly diverse. Some have just started to build their pensions, while others have been collecting their pensions for decades. Good governance and far-sighted financial management have helped the plan become a model. We're proud of our plan and trust you are too. Thank you for listening. Back to you, Hilary.
Thank you, Gary. We're glad to have good financial news to share. Next, I'm pleased to introduce Denisa Bernardo, Benefits Committee Chair and retired plan member, to present the Post-Retirement Group Benefits Review. Denisa served as alternate trustee from 2001 to 2014. The Municipal Employees Pension Committee appointed her to the board in 2014 as a primary trustee.
Thank you, Hilary. I'm here to share highlights of the board's final report of the review we conducted on the Post-Retirement Group Benefits Program. Many of you already know how the positive changes will affect your group benefits. That means your extended healthcare benefits are improving as of January 1st, 2021. I'd like to give an overview of our review as well. First, providing access to a group benefits program is one of the board's top pension security goals. Because of its importance, we regularly review the group benefits program. After the changes made on January 1st, 2017, the board made a promise to you to revisit the new program after 2 years of experience with it. We began our group benefits review in 2018 and received the final report in June 2020. At last year's AGM, I talked about the many parts of our in-depth look. As you can see, there were a number of elements to our review. Many elements were technical in nature to understand how the program is performing. The board hired ZLC Financial and Cubic Health as our health benefit advisors. They helped us get a clear picture of how the program is working. Our review included looking at the extended healthcare and dental plan design against benchmarking, that is, against other similar plans, benchmarking usual and customary fees, reviewing administrative expenses and premiums, studying benefits coverage and levels, assessing funding status and projections, analyzing claims data and other plan analytics, further educating ourselves as a board about plan design and group benefit issues and trends, engaging members about their experience with the program. So what did this data tell us? Here are some highlights. More members are using extended health benefits. The average cost for each use continues to rise. Excluding drugs in 2018, there was an 11% increase in the number of extended health claimants, and spending grew by almost 14% compared to 2017, the first year under the new plan design. The number of claims also increased by close to 13%. With the 2018 extended health care renewal, we saw an opportunity to reduce premiums for members as a result of the cost savings from the 2017 changes. In July 2018, member premiums decreased by about 10%. The Blue RX formulary is working well. We know this because specialty drug spending has remained as expected. That means the formulary, in coordination with BC Fair Pharmacare, is meeting needs. Dental benefit plan costs are expected to increase by 6 to 8% annually. Much of this increase is due to new services offered by dentists, which are more costly than the underlying basic services. The group benefits program was well aligned in many ways when we benchmarked it against other similar plans. There were also some differences. Some of these differences were addressed in our survey with members, including potentially adding coverage of a shingles vaccine and changes in how paramedical costs are covered. There is an opportunity to improve the group benefit program in certain ways. One example is vision care. In 2018, almost 93% of members filing vision claims reached their maximum. Vision care is the most used extended health benefit aside from prescription drugs. We also wanted to learn from you, our members, about your experience with the program. We want to say thanks to more than 4,000 of you who participated in the survey. which was open from October to November last year. Here's what we learned from those who participated in the survey. The first three items are ranked in order of most to least important. The most important potential benefit was enhanced vision care coverage. The next most important potential benefit was enhancing the current paramedical services for things like physio, chiropractic, and massage. Of moderate interest was coverage for the shingles vaccine and flash glucose monitors. Reviews were mixed for a potential new reimbursement structure. The potential new structure was to increase the percentage reimbursed after the deductible. Members were also very interested in learning more about how low-cost pharmacies can help save money. You'll be hearing more about that later. We also asked you about your experience with Pacific Blue Cross. Overall, nearly all respondents were satisfied with PBC's service. Only 6% of respondents were not satisfied. Although this percentage is low, we continue to work with Pacific Blue Cross to enhance service where possible. We asked those who are part of the dental plan about their satisfaction with dental benefits. 70% of respondents said they were very or somewhat satisfied. Again, we thank all the members who participated in the survey. Your responses will help inform how the board manages group benefits in the future. So how did we get here and what happens next? In June, the board received the final report of the post-retirement group benefits review. At that time, the board deliberated on the benefit plan design changes needed. In July, we announced what the changes would be. We are continuing to provide this information to members, and this presentation is one of our channels to do just that. The changes will take effect January 1st, 2021. Here are the specific changes. Increasing vision care to $250 every 2 years. It will also include eye exams for all members with EHC coverage. Restructuring paramedical reimbursement to $500 annually per service type per person. Previously, some of the service types were combined. Adding coverage for the shingles vaccine. Standardizing coverage of dispensing fees for maintenance medications to 5 fills per year per medication. This aligns with the industry best practice of 90-day prescription fills. For members on blister packaging who meet certain criteria, 13 fees per year will be standard. The dispensing fee charged by a pharmacy covers things like verifying a prescription, reviewing your medications to checking for interactions, billing, and patient counseling. According to Pacific Blue Cross, the fees can range from $4.49 to $15 or more. I'd like to note here that members are not required to get 90-day fills for their maintenance medications. Rather, the change means the dispensing fee portion of the prescription cost will be covered for the first 5 fills. Members may choose to get monthly fills. They will then be responsible for the dispensing fee after the first 5. There are also safeguards in place for situations like a pandemic or shortages of certain drugs. In those cases, the pharmacy can override the 5-fill limitation, so you would not be billed for additional dispensing fees. We made other changes to make sure the plan aligns with best practices and industry standards. These are using targeted case management and prior authorization for high-dose opioids to ensure safe and effective use of medications, and amending coverage of medical supplies to align with industry standards. This change will remove coverage for oral sleep apnea devices. Other devices are still covered. This affects a very small number of members. Earlier, I mentioned an opportunity to save money by using low-cost pharmacies. I'd like to share more about that now. What you pay for prescription drugs depends on where you have your prescription filled. Pharmacies have different rates for the ingredient costs, as well as markup and dispensing fees. Pacific Blue Cross has a preferred pharmacy network with pharmacies that have the lowest dispensing fees. For the program as a whole, that could mean millions of dollars in savings. This slide shows an example of some yearly cost savings. This member shops at a Pacific Blue Cross preferred pharmacy. The approximate cost to them is about $4,980 per year. The approximate cost to shop outside of the network is about $5,360. The member saves about $380 and the plan saves about $270. Plan savings of $270 per year means that less is accumulated towards your lifetime maximum. While we acknowledge these pharmacies may not be accessible for all members, if more plan members would choose a low-cost pharmacy, the potential savings could be substantial to members and to the plan. Pharmacies in Pacific Blue Cross Plan include BioScript, Costco, Freshco, Lawton's, London Drugs, Pocket Pills, Price Smart, Safeway, Save On Foods, Sobeys, and Thrifty Foods. One of the most cost-effective choices is Costco Pharmacy, which does not require a membership and offers free home delivery. We want to share this information because many members who took our survey said they weren't aware of the preferred pharmacy network, but felt it was very important. We encourage you to explore the savings through Pacific Blue Cross Preferred Pharmacy Network on the plan website. All the information I've shared today is on the plan website. I encourage you to read more about it at your leisure. Thank you for your time this morning. I look forward to your questions during the question and answer session. I'll turn it back to Hilary now.
Thank you for sharing that report, Denisa. Now Gordon Fife is here to talk about the plan's investments. Gordon is the CEO and Chief Investment Officer for BCI, the plan's investment manager. He has more than 30 years of experience in the investment and financial industry. Please welcome Gordon Fife.
Thank you, Hilary. I'm Gordon Fife, Chief Executive of BCI, the British Columbia Investment Management Corporation, manager of your pension funds. BCI is today managing over $185 billion, of which $60 billion is from your pension, the Municipal Pension Plan. BCI employs 600 people in Victoria and 1,200 across Canada and around the world through our real estate subsidiary, Quadreal. Over the past 6 years, we've been pursuing a strategy which put BCI on a solid footing for the chaos that began in March. The strategy first created more investment products, which allowed you to reduce your allocation to public equities. Second, it saw us take more control over the assets by managing more of them ourselves. And third, we've installed teams and better systems to track and measure our portfolios and risks, including long-term risks associated to the environment and climate change. By mid-March, all BCI employees were working from home. This would not have been possible without the new accounting system, which by pure good luck launched only 2 weeks before we left the office, and that after 3 years of development. So the world, the financial markets, and how all of us view the future has sure changed in the last 7 months. But the road back to normal for us at BCI started in June as we launched phase 1 of our return to office project with 50 employees. We've now in phase 3 with just over 300 volunteers back in the office, following the plans and protocols we've put in place based on guidelines set by the health authorities and WorkSafe. We're being very cautious and we're being very, very safe because I need everyone at BCI healthy to take care of your capital. So everywhere there's a lot of uncertainty, obviously medically, but for today's discussion, I'll focus on the economic and financial market uncertainty. And here, the worst case scenario, an economic depression, seems to have been avoided. The rapid and aggressive monetary and fiscal actions taken by central banks and governments around the world has succeeded in avoiding a negative inflationary scenario that would have led to massive debt defaults, corporate bankruptcies, and an economic depression. We will get back or close to the economic trend line that was in place before the virus, probably sometime late next year if the damage is not too severe. But a serious second wave will cause more damage and a longer lag back to the pre-virus economic trend, 2, maybe 3 years. But whenever that is, we are not going to be returning to the same world we knew. Things have changed. Other things have been learned. I'm going to mention 4 that we're watching here of these changes. And the first change I'm going to mention is a very simple one. That's that web-based activities support communication, collaboration, education, medical attention, and shopping way, way better than was expected. The second change is a socially difficult one. As companies reopen, they are not calling back all of their furloughed employees and are running their businesses with fewer people. So we should expect an increase in structural unemployment, particularly in mid-management, white-collar jobs, the middle class. For investors, this could mean improved profit margins in the large and surviving companies. The third change we're monitoring is a bit hard to believe, but it is that inflation is coming back, and probably sooner than we think. Pre-virus, inflation was starting to show, and now it may well be back before we expect. The central banks have created an unprecedented amount of money since the crisis began, and the central banks are also very, very reluctant to raise interest rates because they're more afraid of negative inflation than they are of inflation. And the final change, number 4, that I want to mention, I'm calling it a global reset. And that's that China has been the world's manufacturer for the last few decades. Cheap labor, quick technology transfer, and targeted industrial policy all supported offshoring to China and globalization of supply chains. But disruption in the first quarter of this year as parts of China shut down, and now political and security of supply concerns are changing things. Medically and strategically important products will increasingly be manufactured at home in the home countries. Supply chains are going to diversify over many source countries. And this is going to benefit places like India and Vietnam, but it will be at the expense of China. We're watching this and testing these theses to see what the implications are for our portfolios. Looking back, we began preparing BCI's liquidity positions for a market downturn over 2 years ago to assure that we wouldn't be forced to sell an asset before we wanted to. And in addition to that, through a combination of good strategy, but also some good luck, we have avoided any serious problems. We've avoided any of the really hard hit sectors in the portfolio. And you've probably read that not all of our peers in Canada have been as fortunate. BCI has no or very, very few hotels. We sold off the Delta hotels in the early part of 2017. We have no material exposure to retirement or long-term care homes, airports. We're underweight shopping centers, no exposure to WeWork or movie theaters, or for that matter, cruise lines. But also helping your fund's performance were asset mix changes your trustees made in the last 2 years. They reduced public equities, especially Canadian equities, and increased allocations to fixed income, private equity, real estate, and infrastructure. Some of our investments have done very, very well during COVID. A company known as BHC is a Korean chicken and beer restaurant franchise that does home delivery. We bought this company with our partner in Korea in December of 2018. Now, lockdown has kept people out of restaurants, but it sure hasn't kept them from ordering takeout and having delivery at home. We're now selling a piece of BHC for more than 5 times the investment price we paid less than 2 years ago. In dollar terms, we invested $150 million, and the sale now values our position at $800 million. Our private equity investment in Refresco, which is now the world's largest beverage bottler, has benefited from more meals and therefore more drinks being consumed at home. And Oak Ridge, our large Vancouver development, had planned to remake the shopping complex over a number of years, requiring relocation of the retailers throughout the process. Well, with in-store retail near dead, an option to bring that construction forward now exists. And online shopping, as you've seen, is boosting Amazon. And New York's petitions against Amazon locating there has been huge to Vancouver's benefit. Our downtown Vancouver post office development has leased both of the towers to Amazon, where they'll locate an estimated 7,000 employees when the project is completed. So, although the financial crisis has battered the global markets, the Municipal Pension Plan remains well funded. Your fund's actuarial hurdle rate is 6.5%, and your fund has outperformed that over the long term with a 7.7% average annual return over 15 years and almost 9% average annual return over 10 years. Last year, the return was 12.5%. The market value of your plan increased from $53 billion in 2018 to almost $60 billion last year. So, at BCI, instead of having to dig in and resolve issues in the existing portfolio, our teams have had time to consider some of the above themes and to work with the networks of partners we've built around the world over the last 6 years to start looking for opportunities in all the chaos. A few are showing up now, but a lot more are going to start to surface over the next 18 months. While there may be more volatility in the coming months, the liquidity positions in our portfolios remain very healthy, and we won't be forced into selling any assets we don't want to. And we will also have the capacity to capitalize on any opportunities we can uncover as this all unfolds. Anyway, at BCI, we're starting to think about what could be changing and then what opportunities may arise for the portfolio in that. And with that, I'm going to end. And at the end of the sessions, there'll be a question and answer period, and I'd be pleased to answer any questions you may have. Thank you very much.
Thank you, Gordon, for sharing your in-depth knowledge and your thoughts on investments. Before closing out our reports, I'd like to make a few more comments. As a board, our focus is on a sustainable plan now and for the future. That means taking a long-term view, as we have always mentioned. So what's coming up in this year? Firstly, the plan partners are raising awareness on potential plan changes. We will continue to support their efforts on this very important work, and I will give you more on this in a minute. As you also heard in Denise's presentation, we will also implement changes to group benefits now that we've completed our member engagement and review of those benefits. We will maintain contribution rates for employers. To help employers more accurately plan and budget contribution rates, we are no longer calculating blended contribution rates annually. For 2021, employers will continue to pay their current individual blended contribution rates received in the fall of 2019. In future years, in general, employers' individual blended contribution rates will be adjusted following the plan's actuarial valuation. The board continues to monitor the COVID-19 pandemic situation and look at ways the plan can best support members and employers. A new leave type for COVID-19 has been added to the Employment Standards Act. We will work to inform employers and members how this leave affects their service and pension. The board has also completed its long-range strategic planning, and we are sharing the strategy with plan stakeholders. We do this every few years to revisit our long-term goals and longer-term vision. By doing this, we make sure we are in line with shorter-term plans with the broader mission, which helps us be more consistent when we make decisions. This strategy is also now available on our plan website. I'd like to expand a little bit on the potential plan changes I mentioned earlier. The board is very encouraged the plan partners are making progress on plan redesign. This will affect how the plan is structured to ensure it's sustainable and equitable for current and future members. The board has referred a number of plan design issues to the plan partners over the past few years to consider and advise on appropriate changes. The plan partner working group, composed of designated representatives, has been working on these issues. The plan partners are responsible for approving a plan partner agreement and directing the board to amend the plan rules to implement the changes. The board is responsible for making sure that these amendments align with legislative and trust requirements and fiduciary duties. We also consider and provide advice to the plan partners on the cost and administrative impacts of the changes. The plan partners will make a decision on the plan design changes after consulting with board and engaging with plan stakeholders. We anticipate that these changes will not go into effect before January 1st, 2022. We encourage you to learn more about these important and valuable proposed changes. You can find information on the Plan Partners Engagement homepage at mppredesign.ca, and you will see that site on the screen. Following what members have shared over the years, the board is committed to providing more investment information with members and other stakeholders. This includes the board's refreshed investment beliefs and asset allocation update, new investment strategies, and expanded responsible investing information, including task force on climate-related financial disclosure reporting. The climate-related disclosure is included for the first time in our 2019 annual report, which is now available on the Plan website. More investment content is available on our website under About Us. I welcome you to visit the site and learn more. Before we open it up to questions, we're aware that there is an interest in the Plan Partners proposal for plan changes. To provide you with more information and to best address your questions, the Plan Partners have scheduled webinars tomorrow and Monday. Tomorrow's webinar sessions for the plan design is on Friday, October 16th one is at 9:30 a.m. and the other one is at 1:30 p.m. Again, tomorrow, Friday, October 16th, one at 9:30 a.m. and one at 1:30 p.m. Another session will take place on Monday, October 19th, and this session will be held at 6:30 p.m. Again, the other session is on Monday, October 19th, and the session is at 6:30 p.m. These will be 90-minute Zoom sessions and will include a presentation by Plan Partners, both employer and employee reps will be there, and a moderated question and answer session. You can register for the webinars at www.mppredesign.ca after the conclusion of the AGM. And again, that site is on the screen. Now we will begin our question and answer session. Panelists are ready to answer your questions. Our panelists today are Vice Chair Gary Yee, Benefits Committee Chair Denise Bernardo, BCI's CEO and CIO Gordon Fife, as well as our Executive Director Judy Payne. We also have other service agents and service providers here to address your inquiries. You can either send an email to the address you see on the screen or enter your question in the question box located on the bottom right of your screen. We will get to as many questions as we can. However, this year, we are very pleased to say that we have over 1,200 people registered for this AGM. Therefore, should we not be able to get to all the questions, we will be happy to post the most common questions with our answers on the website. On another note, we have just received a question about the transcript of this AGM. We will look into this, but also a recording will be available on the website later this week. We are ready for your questions. So the first question that I see coming up on our screen, and I will read the question so that everybody is aware. First of all, it's actually not a question, it's a comment, and I appreciate this. We've had a comment appreciating the very informative group benefits presentation. So I thank Denise Bernardo for making such a good presentation. Thank you for the comment about the good presentation to whoever submitted that. The next question we have is, which shingles vaccination will be covered? And will it be covered at 100%? I would like to ask a representative from PBC to respond to this question, if I may.
Of course. Thanks very much, Hilary. This is Monique Klein from Pacific Blue Cross. So thank you for the question. Yes, so in British Columbia, there are two vaccines available for shingles, and one is called Shingrix and the other one is called Zostavax. And both of those drugs will be covered as of January 1st at the standard drug plan percentage, which is 70%.
Thank you, Monique. All right. The next question that we have is, we've had some questions in terms of the plan design and how they are equitable when changes proposed are different for different group members. The board is very pleased that the plan design is, plan partners, are making changes on the plan design, or that we have an agreement in principle. As I mentioned earlier, this agreement in principle is going to be proactive, and we will be having the plan partners engage with our stakeholders. I would suggest that in order to get more information about the plan redesign, you visit the site mppredesign.ca, and I also strongly recommend that you link into one of the webinars either tomorrow or Monday. They can answer your questions more specifically in terms of information and details about the plan redesign. Our next question that we have is, could we please explain what the word negative inflation means? I'd like to turn this over to Gordon Fife to respond, please.
Yes, it's exactly as it sounds. It's the reverse of inflation. Inflation is when the price of things keep going up. Negative inflation is when they go down. So think of it this way. Let's say you borrow $100 to buy an asset with the expectation that the value of that asset is going to go up over time. But that the $100 that you borrowed, that's static. You owe the bank the $100, but if you bought the right asset, it's going to go up and you're going to make money. In a negative inflation scenario, the reverse is true. You borrow $100, you still owe $100, but rather than going up, that asset goes down and down and down. So what ends up happening in a scenario like that is we all stop investing. We start hoarding our cash because of the expectation that everything's going to be cheaper in the future. And that just completely kills the economy. And it also, the central banks have really no tools to fight negative inflation. If you have positive inflation, they can raise interest rates. But when you have negative inflation, they're really limited in terms of the policy response they can have. So you end up, as Japan did, in this negative spiral downward, and your economy goes down as well.
Thank you, Gordon. So the next question is, what is the current value as of this AGM? In other words, how much has been lost thus far in the pandemic? And again, I turn the microphone over to Gordon.
I'd have to check the most recent valuations. Rob or Chelsea, you have the most recent.
Rob, do you have?
Sure, I'm happy to cover it. Actually, as of the end of August, the preliminary year-to-date return for the Municipal Pension Plan is 3%. So while we've gone through a period of volatility, we've actually generated more money. So it is higher than 60 billion at the start of the year. So good news to pass along so far. But as Gordon said, still a lot of volatility and things to be concerned about in relation to COVID.
Thank you, Rob, and thank you, Gordon. The next question that we have on the screen is, how does ethics figure in making investment choices? I ask this considering the well-known green-based practices of corporations like Amazon. So one of the things that's very important to express is that it's the board's fiduciary duty to maximize returns and ensure that we are paying the benefits of our pension plan. But this is not to say that we don't look at the ethics and we don't look at ESG factors. We do, and we take them very seriously. So much so that we are very concerned about education in these areas. We've just undergone actually a very, very good education series on climate change, etc., for our investments. I would like to actually turn this over to Gordon as well to talk about how the ethics figure in making investment choices. Thanks, Gordon.
The legislation is very clear on what our responsibility is in terms of investment. We must invest only for the returns while paying attention to the risks. So there's no value-based investment allowed. But we are very long-term investors, very long-term. We're talking about decades. And so when we're investing in a business or buying an asset, we consider a lot of things which perhaps shorter-term investors wouldn't. So for example, if a company is damaging the environment through its operations, someone who's going to buy that company on a short trade, for example, for a couple of months, and some people are trading overnight, but a couple of months or a few quarters, they may not be very concerned about that. But because we're going to own that business for decades, we are very concerned, because that business, through its conduct, may end up losing clients. It may end up receiving fines and penalties, or it may lose its license to operate completely. And any of those things will impact the return on our investment in that business. So we do pay attention to those longer term risks. So for the example of Amazon that you gave, we are aware of that. We have been engaging with the company, and we want to make sure that the practices do not damage the long-term return that we're expecting. So we're able to engage with the companies. We're able to influence the businesses from some of these bad practices, but we're doing it because it can affect the return, not because it's a value-based decision that we're making.
Thank you, Gordon. The next question I have up on the screen is there any legislation that would allow the province to take funds from the municipal pension plan if they are in desperate need of money to cover the bills? So the short answer to that is no. And I'd like to turn it over to Judy.
Thanks, Hilary. Good morning, everybody. No, so the short answer is no. The way the plan is structured as a joint trusteeship, the government is a key stakeholder in the plan, but like employers and members, they have no right to assets in the plan, and they have no responsibilities for liabilities in the plan. So in fact, the way the plan is structured creates an ally, if you will, with the government, because the plan, together with the other public sector plans in British Columbia, contribute to a very strong credit rating for government. So the short answer is no. Government can't take money out of the plan to deal with deficits.
Thank you, Judy. So the next question I have is, how much money has been saved by having the AGM online? So I don't have an exact figure right now. It is most definitely something that we will be looking at. But we know that we are saving costs of travel. We're saving the costs of booking the room. As you know, we normally have it in New West. But there is obviously some costs involved in having this set up and the technology for hosting this session, etc. But what actually excites me the most about having this virtual meeting is the fact that we've had over 1,200 people register. And I think that just is wonderful that we are able to engage with so many people. In past AGMs, our enrollment is approximately 200 to 300, depending on the year and depending on what we are discussing. But the fact that we have over 1,200 people is so exciting to me, and I'm just thrilled. So the next question we have on the screen is, can the MPP provide example of BCI's engagement strategies leading to a fossil fuel company in which MPP is invested, aligning its business model with the Paris Agreement or achieving absolute carbon emissions reductions? I would like to turn this over to Gordon, if that's okay.
Yes, it sure is. I'll give one example. We're an active participant in a global collaborative engagement, which represents $35 trillion in assets under management around the world. And it's resulted in a net zero emission strategy by 2050. And it's been adopted by companies such as Teck Resources, Canadian Natural Resources, BP, and Royal Dutch Shell. And these engagements have achieved and are achieving real reductions in emissions, which I can tell you divestment does not do.
Thank you, Gordon. The next question I have is, will the plan consider additional voluntary contributions similar to the program offered by OMERS? And I'd like to turn this question over to Judy, please.
Thanks, Hilary. I know the board has looked at additional voluntary contributions historically, but for a variety of reasons, that's not on the board's priorities right now. So I don't think there's any suggestion that it's on the list of future to-do items either.
All right. We do continue to see similar questions with regard to the plan redesign. So I, again, encourage you to go on to the MPP redesign website and take a look there. As well, on the MPP redesign website is a calculator, which allows you to be able to calculate what your pension would be based on the old rules versus the new rules. And I again mentioned that the plan redesign is prospective. Therefore, what that means is that any pension that you have earned prior to December 1st, or excuse me, December 31st, 20 would apply to the old rules, whereas the new rules will take effect as of January 1st, 2022, and they will be applicable to any pensions that you've earned after that date. So again, I encourage you to look at that website, and I encourage you to go onto that website to sign up for the webinars that are taking place tomorrow and Monday. So the next question that I have is, it says it can't find the spot to register for webinars on the redesign site. All right, that's good. It's not good that you can't find it, but it's good that you've asked. Located at the top of the web page, see the button that says register now. If after this you still can't find it, please contact us and we will help you through that. The next question is, can you please inform the members watching on how COLA is arrived at? Also, what is the current COLA cap? I would ask Judy Payne to take this question, please.
Thanks, Hilary. The board looks at whether or not to grant cost of living adjustments on an annual basis. Once cost of living adjustments are granted, they are guaranteed and they form part of your basic pension. But in considering whether or not to grant a cost of living adjustment in any given year, the board considers whether there's enough money in the inflation adjustment account, what the change in the cost of living has been federally. So they look at the change in the CPI, which is the Consumer Price Index. And they also look at what is the sustainable COLA cap that was set following the last valuation, which looks at what is the maximum COLA that can be granted on a sustainable basis in order to ensure that there are future cost of living adjustments for current and for future retirees.
Thank you, Judy. So what is the next question on the list is, what is our plan's opinion on investing in gold like some pension plans are doing in the US? I would like to turn this over to Gordon because this is a BCI investment question.
Let's start by defining what is gold. Gold is it's an alternative currency. So you can invest in a currency or you can invest in gold. There is some, I guess, manufacturing use for it, jewelry, but that's really at the minimum. So gold is an alternative to holding a currency. But the problem with gold is it doesn't carry any interest rate. And you could actually say it has a negative interest rate because if you're going to have gold, you got to store it somewhere and you got to pay somebody to look after it unless you hide it under your mattress. And so it's starting to look a lot more interesting because, as I mentioned in my talk earlier, the central banks are printing an awful lot of money right now. So the currencies, they're printing a lot. In addition to that, you have seen interest rates in pretty much all of the currencies are getting right down there at zero. And in some places, particularly in Europe, interest rates are now negative. So all of a sudden, gold is starting to look like a very attractive alternative to holding some currencies. So I understand why some investors, I don't know about the pension funds, but I know that some investors have been buying gold, obviously, because you've seen the price has gone up significantly over the last 6-7 months.
Thank you, Gordon. So the next question I have is, with the reported health and approximate 6.5% growth in the total value of the plan portfolio, will the plan reinstate dental coverage for retired plan members? So before I pass this over to Denise, I would just like to say that although we are very happy that we have a 6.5% growth in the total value of the plan portfolio, this growth enables us to maintain contribution rates and enables us to pay the pension plan in the future for future members. The 6.5% growth is not just for plan benefits. But Denisa, if you would like to make a comment on this as well, I'd turn the microphone over to you.
Thank you, Hilary. So as Hilary has said, we don't pay for the post-retirement group benefits out of the total, that 6.5% growth. What we do look at is the portion that is paid by the employer contributions, and then we have a cap of 0.08. So we do look at it each year in terms of how much we have spent within that funding envelope and decide to make any changes. So at this point, we are not anticipating any changes to the dental benefits.
Thank you, Denisa. So the next one is not a question, but it's a positive comment about the format of this presentation. And I would really like to pass along my thanks for this comment. This member has never been able to attend the meeting before and finds it very informative, and the presentation format very informative. Thank you very much. I mean, it's something that we're trying. We're not able to meet in person because of COVID-19. And as I said before, for us, it's so exciting that we have over 1,200 members logged in and registered for this presentation. So I'm very glad that it is working for you. That is wonderful. So thank you very much for that positive comment. So the next question I have coming up is, are there concerns about the Canadian real estate bubble? And I'd like to turn this either over to Gordon or Rob.
I'll go. I'll take that one, Rob. You know, what's happening is that normally bonds are a great diversifier. So you own some equities, you own some bonds. They usually offset each other. But what's happened is that bonds since March really aren't, they're not following any market forces. They're following a force that's driven by the central banks. So the bonds today, as you know, are yielding next to nothing, government bonds. And they're not really a great diversifier to some extent in the portfolio. And again, I'm talking about government bonds, not some of the corporates and others. And so you're seeing particularly individuals moving into real estate as an alternative. Mortgage rates are very low. Bonds aren't paying anything. So why don't we buy some real estate? In terms of other areas, there's not a bubble in I think your question refers really to housing and mainly single family housing. It doesn't apply to office buildings. It's certainly not applying to shopping centers and things like that. But that's really what's driving it. Is the mortgage rates are low, and it's really becoming an investment for a lot of folks. So am I concerned about it? I'm get concerned when the central bank gets concerned. But as we saw 2 years ago, when the central bank gets concerned, they do take action. They make it much more difficult to borrow, and they were able to take the steam out before. So when they get concerned, there are tools there that they will use again to make sure that it doesn't get too overblown.
Thank you, Gordon. So the next question I have coming up is, why did the board choose to go to a digital pension life instead of a hard copy that was mailed out to all members, which included their T4A in January. So I am going to turn this over to Aaron, but I just want to let the person who submitted this question know that there is still available a hard copy. So Aaron, could I ask you to address this question, please?
Yeah, thanks, Hilary. Happy to take this one. Really, the short answer is many members have asked for digital statements and newsletters for quite some time, and so over the past year, we've introduced a new opportunity for members to opt into digital distribution. So, as Hilary said, the paper copy or hard copies will continue to be available, but we are really encouraging members to move online and go digital so that we can reduce our footprint. And it's much easier for distribution to members. They get it in a more timely way. And yeah, so basically, really, we're responding to what our members have been asking for the past some time. So if you haven't opted into digital distribution, if you're an active member or or retiree, for any of your communications, you can go onto my account and select the digital distribution for information about the plan.
Thanks, Aaron. So the next question that we have coming up is, I'm concerned that sleep apnea device coverage is planned to be discontinued. What are the options? So I'll turn this over to PBC to answer, please.
Thanks, Hilary. Yes, that's a very good question. It's Monique again from Pacific Blue Cross speaking. So sleep apnea devices are actually still going to be covered on the plan. The only aspect that's been removed is the oral device. And that decision was made due to industry standards and in consideration of the usual and customary practices in the industry. So there is still coverage for sleep apnea available. It's just that the oral device is being removed as it's not as standard in the industry.
Thank you very much for that answer. So the next question we have is, how is the money saved from not paying MSP premiums? And Denisa, I would like to turn that question over to you, please.
Thank you, Hilary. So before I answer this question, I just want to clarify something I might have said in the earlier question around how we fund post-retirement group benefits. So the 6.5% is actually the investment target. The actual return was 12.5%, as was stated in Gary's presentation. So regardless of that, we still take the post-retirement group benefits from the employer contribution. So we have to look at a different funding envelope. So regarding the MSP premiums, the subsidies were actually funded from the basic account with an arrangement that we had prior to even joint trusteeship. So that pays for a lifetime pension for all members, which is the basic account, sorry. So the MSP subsidies are not pre-funded and are not part of the lifetime pension. So the thought that we had on the board was that the money should remain in the basic account to strengthen the plan as a whole, which is good news for all plan members.
Thank you, Denisa. So the next question that we have is in regards to the COLA cap for 2021. So Judy, could you please take this question?
Yeah, so I think members are interested in understanding what the cost of living adjustment might be January 1st. And the short answer is that decision hasn't been made yet. So there will be a discussion amongst trustees this fall. And as soon as a decision is made about the COLA for January, it will be announced. What I can tell you is that the current COLA cap remains in place at 2.1%.
Thank you, Judy. So the next question we have is in regards to plan redesign and whether or not this is a proposed change or whether or not this is a done deal. So I'm going to reiterate to everybody that these are proposed changes. There is an agreement in principle and the plan partners are still in communications with stakeholders, et cetera. And I, again, encourage you to go on to the MPP redesign and they're still taking questions and comments on that website, mppredesign.ca. And as well, again, you will have the opportunity to discuss with employer and employee members of the plan partners tomorrow and Monday for the webinars that they are holding for the redesign program. The next question we have is, nurses are considering creating their own pension plan. What are the financial implications to the municipal pension plan if the nurses do pull out? So Judy, could you address this question, please?
Thanks, Hilary. So nurses, as part of a collective agreement with the Health Employers Association of BC, are conducting a nurses pension governance review. They are looking at a couple of options, including the status quo, staying in the municipal pension plan, and a variation on that, as well as looking at whether or not a standalone nurses plan is feasible. At this point, there have not been any decisions that have been made with respect to that governance review. If nurses were to pull out of the pension plan would be kept whole. So however that would be negotiated, it would be done in such a way that there was not a negative financial impact on the remaining members of the pension plan. I would just say, though, that the nurses have been a very important part of the pension plan, the municipal pension plan. They've been part of negotiations at the time of joint trusteeship, and they've played a very pivotal role in terms of the governance of the municipal pension plan going forward. So I think all trustees would be very happy to have nurses continue to participate in the pension plan.
Thank you, Judy. The next question we have is this the most attended AGM ever? And most certainly, by registered numbers, yes, it is. As I mentioned a couple of times, we have over 1,200 people registered for this AGM today. And normally in past, what we do is we have approximately 200 to 300 people attending the AGMs that we have in person. So yes, I would say it is by far the most attended AGM ever. Okay, next question. Sounds like the plan has experienced growth in 2020 with low to zero inflation expected for 2020, thus low COLA. Does the IAA fund stay in that account or can that be distributed to other accounts? Judy, could I ask you to respond to this question, please?
Sure. So the pension plan has a couple of accounts set up. The basic account funds the basic pension. The inflation adjustment account accumulates funds to pay for future cost of living adjustments. The money in the inflation adjustment account, once a cost of living adjustment is granted, the capitalized value of that adjustment is transferred to the basic pension account, which is why when cost of living adjustments are granted, they become guaranteed after they've been granted, because they form part of the basic pension promise and are paid out of the basic account. Money that is in the inflation adjustment account is not used for any other purpose.
Thank you, Judy. The next question that we have on the screen coming up is, how does the plan determine what other pension plans it will have a reciprocal agreement with? And I ask Aaron to take that question, please.
Sure. Thanks, Hilary. Yeah, the Municipal Pension Plan has reciprocal transfer agreements with a large number of pension plans right across Canada, not just with other public sector plans in BC, but through most of the other provinces as well. We participate for the most part in one main agreement that covers, it's called the National Transfer Agreement, and it covers most of the large public sector pension plans in Canada, and that's pretty encompassing. But if there are other pension plans that are interested in having an agreement with the municipal pension plan, that is something that the board could consider if necessary.
Thank you, Aaron. So the next question is there a list of what is being changed on the EHC portion of group benefits? There was a board communique that went out on July 16th, and you can find this on the plan website, and it's under news-plan news. So if you look there, that will give you the information in terms of the changes of the EHC portion of the group benefits. Next question, could you please advise as to the status and future plans for the MPP approaching retirement seminars? And Aaron, could you address this question, please?
Sure, thanks, Hilary. Yeah, we've obviously, because of the current pandemic environment that we're in, we've had to shift to more an online presence for member education, and so webinars are now available on the website, and so you can go to the plan website to the member education section, and there's details there that will explain how you can register for those sessions. So as I said, because of the pandemic, we're not doing in-person seminars at the moment, and we've moved to an online webinar format. Members are still able to engage with a presenter, ask questions similar to this sort of situation where you can ask questions online and hear from the presenters.
Thank you, Aaron. So I want to go back to the question about the EHC question in terms of portion of group benefits, et cetera. And Monique Klein has just signaled to me that she would like to provide some information as to where that information can also be found. So Monique, can I turn the microphone over to you?
Yes, no problem. Municipal Cross is also going to be making sure that you're really well informed with all of the changes that are upcoming in January. And we are also going to be posting in November the list of all of the information, as well as other important information about the January changes on the website. So if you go to your member profile, you'll see a link to this information, or you can go straight to the PBC MPP microsite, which is at www.pac.bluecross.ca/MPP. And there you'll find information with regard to forms and brochures and all kinds of newsfeed items. But that's our news center, so that we are able to communicate with the retirees more effectively and provide a lot of other information there as well. But I just wanted to point that out so that the members can go there and also see the information about the new changes as of January. We're going to be making updates very shortly, but if you go in early November, everything should be updated there as well.
Great. Thanks so much, Monique. I appreciate you providing that information to our listeners as well. So the next question I have is annual pension statements that employers need to distribute to members. Will we be able to move to electronic statements only? And Aaron, could I ask you to address this question, please?
Yeah, so similar to my previous response about the digital opt-in, as of earlier this year, we introduced the ability for members to be able to opt in for digital distribution of their pension statements. And so for active members, that's their annual member benefit statement. Currently, the legislation requires that members have to opt in. So we can't just assume everyone opts out and automatically start distributing information to individual plan members. But we are encouraging members to go online and to select that digital opt-in for their distributions. So that functionality is now available, and we would encourage employers to help us get that message out as well, to the extent that they can with their employees, so that we can get more people online. There's many benefits, not only obviously that the environmental impact of less paper, but there's also you get your statement quicker. It's available online whenever you want it. You don't have to worry about, oh, where did I put it? What drawer is it in? What file did I put it in? Whatever. It's all available. Interestingly enough, your My Account also includes all your historical statements that are available to you. So you can go in, sign into my account, and you can see all your statements going back for your overall, all your membership, along with other tombstone information about you, your service and salary and whatnot. So if you haven't had the opportunity to go check out my account, we would encourage you to do so. If you go on the plan website, I think right at the top, there's a link there for my account, and it's a pretty easy process to get yourself registered.
Great. Thanks, Aaron. Appreciate that. So we have another positive comment. A member has commented that the AGM is very interesting. I'm glad to hear that, and I'm glad you're enjoying it. It's a great way to share information. Everyone is well-spoken and organized. Virtual is a great way to go as this member is in the northern portion of the province and wouldn't be able to attend the AGM without great expense. So I'm so pleased that we have over 1,200 people registered for this AGM. And I am most certainly pleased that people are enjoying it, and it is providing important and helpful information to our members and employers. So the next question I have is it true that existing health conditions are not covered when you join the group health plan? And I'd like to turn this over to Monique Klein from PBC, please.
Yes, thanks, Hilary. It's a great question, and it's not true. So if a member has a pre-existing health conditions, you are lucky to have a group plan to be a part of because those conditions are covered by the group benefit plan. We don't take a look at individual pre-existing conditions for group benefit coverage. It's a different story, individual coverage. So we can be really thankful that we have such a great plan organized by the Municipal Pension Plan.
Great. Thank you, Monique. So we have another COLA question, and it's, is it as of September 30th? And the answer is yes. We base it on the September to September CPI. So again, September 30th to September 30th CPI. The next comment is, congratulations on the long-term returns of MPP. Is there any way we can invest in the fund over and above our employment contributions? It would be another element of one's lifetime income investment. Judy, could I turn the microphone over to you, please?
Yeah, thank you. So this question is very similar to the question we had about additional voluntary contributions. At this point, that's not likely. The plan and our agents are set up to provide defined benefit type contributions, and the ability to set up individual accounts where individuals accumulate returns that are like what the plan does. While I totally understand why an individual would like that, I would like that, that's just not how we're structured. So I don't see it happening anytime soon.
Thank you, Judy. So the next question we have is again from Monique Klein from PBC. What is an oral device? I have a CPAP machine. Will this or the attachments will they still be covered? Monique, could I turn the microphone over to you, please?
Yes. So it's just the oral device that is actually not going to be covered. The CPAP, sleep apnea CPAP machines, devices are still going to be covered into the future.
Thank you, Monique.
Oral device, for those that want a little bit more information, it's like a mouth guard and repositions the jaw. And the sleep apnea CPAP machines is an entirely different device, what this person has, and that will continue to be covered into the future per the contract guidelines.
Thank you. And so we have another question for Monique to answer. If we are currently covered under Manulife, do we have to move to Blue Cross under the pension plan?
So if the member is currently covered under an active plan, under their group benefits plan, then yes, when they retire, they need to move over to the Municipal Pension Plan group benefit plan. And that would be with Pacific Blue Cross.
Okay, thank you, Monique. So the next question we have is how many active members are in the plan? And I can tell you that as of December 31st, 2019, we had approximately 210,000 active members in the plan, and that's as of December 31st, 2019. So the next question is, thank you. I am also a first timer. This has been very informative. This is the first I've heard about the nurses, this is the first that I've heard that the nurses may withdraw from municipal pension plan. How does that affect retired nurses? And I'll turn that question over to Judy.
Thanks. The short answer is that you should probably talk to your union and employer about this. So the nurses pension governance review, as I understand it, is with respect to a collective agreement between the Nurses Bargaining Association and the Health Employers Association of BC. So if you are represented by a union, if you're covered by by the NBA collective agreement, then I believe the scope of the pension governance review covers you. But as I say, I would refer you to your union or to your employer for clarification.
Thank you, Judy. So the next comment I have is this is both a thank you and a question for Gordon Fife. I did not quite understand the relation of Oak Ridge and Amazon. So Gordon, could you please clarify that for the listener, please?
I will, and there is no relationship, but the fault for the misunderstanding is mine because I probably was speaking much too fast. So they're two completely separate developments in Vancouver. One is the Oak Ridge Shopping Center is being redeveloped, and it's in fact the largest development, single development in the history of Vancouver. And that is totally separate from Amazon, which is related to our post office. So the old post office in downtown Vancouver, we own that and we're redeveloping it. And there are two towers there, office towers, and both of those have been leased by Amazon. So I apologize for the confusion.
Thank you, Gordon. So I have just had a note that you had stated on the webinar tomorrow was at 9:30 and at 1:30, and I do apologize for that, those words. It actually is 9:30 and 2:30, and when you go onto the register page, it does say 9:30 and 2:30. So again, my apologies for my words. I said 9:30 and 1:30, but it is 9:30 and 2:30. So we also have another comment, not a question, on congratulating everyone involved on an outstanding virtual AGM. Well done. Thank you. So thank you for that kind words. We do appreciate hearing that people are enjoying this AGM, and it does mean a lot to us that the attendance is so high and that we are able to provide valuable information to you as members and employers. The next question that's popped up is, again, we're seeing the plan design questions, and what this person is asking is, what has the preliminary feedback from members been like on the proposed redesign? So the plan partners are still considering the feedback. As I mentioned, this is an agreement in principle. It's not something that is a done deal. It's a proposed plan design change. The plan partners are still considering feedback. And as I mentioned earlier, if you go on to the MPPredesign.ca website, you will see that they are asking for your opinion, asking for the questions. And again, I encourage you to sign up for the webinars tomorrow and Monday, because that will also give you the opportunity to listen to the employer and the employee reps, as well as be able to participate in the question and answer session. So the next question we have is, for members who got out of the dental plan because of no subsidy, can they rejoin the plan without having coverage from another provider? And I turn this over to Monique Klein, please.
Yeah, that's a good question. So if a member didn't apply within 60 days of terminating their retirement date of the plan termination from their standard employee benefit plan, they're not able to join the dental plan, unfortunately. There would be a gap in coverage then in between the time when they had coverage as an active employee member and when they would join the plan. So unfortunately, the rule is that they have to apply within 60 days. And in this case, the person has also mentioned that they didn't have coverage with another provider. So unfortunately, that's the case.
Great. Thank you, Monique. The next question is, how do I choose a beneficiary? Are there any regulations on who I must choose? And I would like to turn the microphone over to Aaron to answer this question, please.
Yeah, thanks, Hilary. How do you choose a beneficiary? Again, I'd encourage you to go online. There is a section on the website that covers this in a fairly comprehensive way. You can now nominate your beneficiary online. And so that'll go straight into your, the information goes straight into your account. There are some limitations on who could be your beneficiary depending on your marital status. So I encourage you to go look at the material online, and if you have any questions, you can contact us at our Member Service Center, and our staff would be happy to answer any specific questions you might have.
Thank you, Aaron. The next question I have is, will the plan be providing a recording of the online AGM, as some of us are working and cannot follow the entire meeting? Yes, absolutely. We will be having a recording available on the plan website. Look out for that. I'm not sure how long it will take us to get it up on the website, but the full recording of this AGM will be available on that website. And we do appreciate members joining in for as long as they can, and understanding that people have other things to do. So yes, we are making that available as a recording. And again, we have another well done comment for a great AGM. So thank you for the positive remarks. And again, this is another huge kudos to Gordon Fife and his team at BCI. I'm confident that all our contributions and investments are well taken care of. I'm grateful to have their expertise and working for us on the plan. And another question for the explanation of Oak Ridge, please. So I'm thinking
that was very, very, that was very kind. Thank you. Very nice words, and I'll certainly pass that along to the team here that are working, taking care of your assets. Oak Ridge is, I guess for people outside of Vancouver, they don't know what Oak Ridge is. So Oak Ridge is a very large shopping center just outside of the downtown area. And it had been underinvested in for quite some time. And we bought that asset in 2000, and I think it was the early part of 2017. And what we're doing is we're completely transforming it. It's no longer just going to be a shopping center. There's a lot of residences that are being built, offices as well, a community center, dance, a large park. So what we've done is we've taken all of that acreage, and you can go online to Oak Ridge, and there's quite a bit of information, a lot of photographs of what it was, but also what it's going to be coming. And we're in the development now. It's a 8-9 year program. So it's really a densification, because it's on the train, what do we call that? The Canada line in Vancouver as well. So it's a huge development. I think overall it's quite a few $1 billion we're investing in that over the next 8 years.
Thank you for that explanation, Gordon. I do also actually want to take the opportunity at this point in time to say that both BCI and the British Columbia Pension Corporation, at the time that COVID broke out, handled it so beautifully. It was seamless. And as a board of trustees, we were very, very confident in the work that they were able to do and the continued high quality, successful work that they've always provided to us. So I just wanted all the members who are listening to know that even through COVID, you are in very, very good hands with all of the partners that we work with. So thank you to everybody that works with us. The next question that we have is the plan aware or of keeping numbers on retired municipal pension plan members receiving a pension but returning to workplace with an MPP employer as they would not contribute to the plan. And Aaron, could I ask you to address this question, please?
Sure. Yeah. We do occasionally look at the data to see what retired members are coming back to work, but we don't, as a normal matter of course, monitor it all the time. We have looked at it in the past, and it's not a huge number of retirees in that position. So yes, we do look at it occasionally, but it's not something that that the plan looks at regularly.
Thank you, Aaron. And so, Aaron, don't close off your mic yet, because I have another question for you. Do employees who are laid off during COVID get a chance to contribute for missing months?
Yeah, so I might need some help from Judy on this one, but I think if my recollection is correct, right now, I mean, we're still dealing with obviously some of the impacts of COVID. At the moment, no, members can't who are laid off due to COVID are not able to purchase that service. However, it is something that the board is currently considering right now. So as you can imagine, there's a number of things that we've had to look at as a result of COVID, and this is one of them. So there may be an opportunity for members in that situation to purchase that service, but keep your eye out for further communication or for information on that. And if the rules are changed to allow that purchase of service, then that'll be communicated to the membership.
So Judy, do you want to add anything to that? Thank you, Aaron.
No, I think Aaron captured the situation really well. So currently there's no provision to purchase, but it is something that we'll be talking about later this fall. And if changes are made, we'll communicate with the membership as quickly as possible.
Okay, thank you, Judy. So the next question is, when we get back to AGMs in person, can you assure us that they will continue to be online? Absolutely. We're very mindful of the fact that so far what we're seeing is this AGM online has been very successful, and it's definitely something we will be considering and talking about as we move forward, planning future AGMs. So the next question, is it necessary to attend all 3 webinars tomorrow for the plan design, all 3 webinars tomorrow and Monday, or will one webinar cover it all? No, you don't have to attend all 3. There have just been 3 time slots provided, understanding that people wouldn't be able to possibly make 1 or 2 of them or something, so that it's just 3 different times available to accommodate people. So absolutely not, you do not have to attend all 3 webinars. I currently have Pacific Blue Cross health benefits under my current employer. When I retire and start taking my pension, will my monthly payments for health and dental benefit coverage to PBC change? And will I receive the same coverage on benefits that I do now? So Aaron, could you take that question, please?
I think Monique's going to help me with that one.
Okay. So when I retire and start taking my pensions, will my monthly payments for health and dental benefit coverage to PBC change? So essentially, when you come off of your employee benefit plan design is entirely, could be entirely different than the municipal pension plan design. So your coverage will change, and you can find out more information about the coverage online when you're close to retirement. Does that answer the question?
Thank you, Monique. I think it does answer the question. If it doesn't, then the person can most certainly send in another question. So the next question I have is for Gordon. How does BC find out and engage in an investment like BHC?
If I told you I go to Korea for dinner and come back the next day, you would think I was crazy. Because who flies halfway around the world for dinner and then comes back? But that's how we do it. We spend so much time traveling, building relationships, building partnerships. So, and then once we have them, and we treat them very, very well. So when a partner, for example, this particular partner in Korea comes and says, I've got this opportunity, we will immediately send a team to Korea to look at it. we'll respond very quickly. If we're not interested, we'll say no right away. If we are interested, we'll throw everything into it and make sure that we can not hold up our partner in doing it. So it really is through developing great relationships around the world, which means we do travel a lot, very, very extensively. But it also, we spend a lot of time not only looking for deals, but also getting to know the other heads of the large funds around the world. So we have here in British Columbia, BCI, we have a few across Canada, but we have big ones in Holland and Japan. And so we've built, myself, over many decades, I've built very good relationships with all of the individuals running these big funds. And in fact, with this summer, we've entered into an agreement with a couple of other big funds from Holland and Japan. It's a sustainable development platform, which will allow us to measure the services and products of companies against the sustainable development plans and goals. And that was simply, I was in New York in early March for a meeting of some of the heads of pension funds, and the fellow who is a friend of mine that runs the $1.3 trillion Japanese fund said, "Hey, Gordon, I'm working on this initiative with the Dutch pension funds, which themselves are very large. Would you at BCI be interested?" And of course, we're very active on this front on sustainability. So we immediately joined up, signed into it. So we travel extensively. We take all relationships very seriously. We nurture them, and we manage them very well.
Great. Thank you, Gordon. So we do have a comment from somebody who's saying that they're very frustrated about the board decision in terms of the dental plan. Will the board reconsider this position? So we, as everybody knows, we undertook a review of the benefits, post-retirement group benefits. We looked at all of the data. We went out and we engaged substantially with the plan members. I can't remember how many people we had interviewing and how many people sent in their responses to our questions about the pension, the post-retirement group benefit plan, but it was substantial. And we took into account the data, we took into account the responses that we got. And as Denisa showed you in the presentation that she did, we measured all of the post-retirement group benefits based on what we read as being the concerns for the members. And we made our decisions based on all of those things combined. So although we are not able to cover absolutely everything, and as much as we would love to, we do work within an envelope, and the post-retirement group benefit review is complete. Monique, did you have any further comments about that, or?
No, I think that's a really good response. Yeah.
Okay, thank you.
So to Hilary, can I add a bit?
Yeah, certainly, Denisa, go ahead.
So just to explain further, in terms of what happens, that each year the board through the benefits committee does look at the cost of extended health benefits, including dental coverage. And I know that the members are paying for that service, or for that, can't think of the word, for dental. But as information comes to us, like, we do look and review at what changes we can make in the future. So at this point, we're not looking at making any changes to the dental subsidies, but depends on all the costs and what the claims that come in.
Thank you very much. And I have been given the information that there was over 4,000 people that responded to the survey for the post-retirement group benefit review. So for personal investments, is it wise to know how much investment fees you are paying for your investments? Do you disclose how the management fees work for our municipal pension plan investments? And the answer to that question is yes, we disclose that, and it's provided in the plan's annual reports, which you can find on the plan website. And the latest report has been updated, and that is on the plan's website. So the next question is, what is the average male-female age of death for municipal pension plan retirees? does this differ substantially from the general population? And I would like to turn the microphone over to Richard Border, our actuary. Richard?
Yeah, so the life expectancy for males when they retire, so roughly a 60-year-old, we would expect them to live to 87, and females to 90. So females live a little longer. The life expectancy of people in this plan is definitely longer than the general population.
Great. Thank you very much, Richard. So the next question that we have on the screen is, I was off the plan for 4 years and now my current employer has joined the municipal pension plan. How might this gap affect my overall retirement planning? And Aaron, can I transfer the microphone over to you?
Sure. Thanks, Hilary. Yeah, so there's some assumptions that I'm making here because it's when the member says I was off the plan for 4 years, I'm assuming they had previously were a member of the plan, actively participating and accruing service. So great news that their current employer has now joined the municipal pension plan and that they're now accruing more service. So that's good. So their overall service will be added together for the purposes of calculating their eventual pension benefit. As far as the impact that this might have on their overall retirement planning, again, I'll put another plug in for for my account and the plan website. Members can go online and look at all their information that's available, but they can also run pension estimates to look at and see based on their data that we have in the system on them. They can run estimates and look at what the implications of different retirement dates and ages and things like that, and consider their broader financial situation and what they can afford to retire on and that sort of thing. So it's hard to say, it depends really on their specific circumstance, but all that information is available. And of course, if they have questions about that, once they've looked at their situation online, they're welcome to contact us either through our secure messaging or through our through the telephone, and we'd be happy to speak to them.
Thank you very much, Aaron. So the next question is, just out of curiosity, how close is BCI to outperforming the S&P 500 index return annually? Gordon?
How do I say this really nicely? It's this, it's like comparing an apple and an orange. You can't compare them. And the reason is your pension fund is not invested 100% in equity. And that's because we don't need to take that much risk to reach that actuarial hurdle rate of 6.5%. So to say how has the fund done versus the S, which by the way, you can get that because you get the returns of the fund off of the website, but you can easily track down the S&P 500, but you'll have to convert for the currency difference because the fund is reported in Canadian dollars and the S&P is reported in US dollars. So you really need to compare performance of assets that have similar risk levels. And clearly the risk of the S&P 500, which is 100% equity, is much higher than the risk of your pension fund, which is a combination of all sorts of different assets, many of them much, much lower risk than that. So I don't have that number here. Let me just see, somebody's just sent me, the 5-year return was 8%. And yeah, okay, but that's not the S&P 500. So that would be my answer is you can go ahead and calculate that yourself, but don't say, well, the fund has done really well or it hasn't done well based on that, because the risk profiles of those two assets are totally different.
Thank you very much, Gordon. So the next one is a question for Blue Cross. Why is the Dexcom G6 sensor not covered for diabetes patients? And Monique, can I ask you to address that, please?
Sure. I believe that the item in reference is a continuous glucose monitor. And if that's the case, then the board did look at this, but apparently the member survey didn't show very much interest to add continuous glucose monitors onto the plan. And therefore it was decided not to include that product. And if there's any other drugs that a member is looking at that perhaps isn't automatically covered, we could cover those additional drugs via special authorization through our Blue RX formulary. And that would require, a doctor to provide further information, which is available, which can be made available via the forms that we have online to give us additional information to provide the coverage.
Thank you, Monique. So the next question is, all levels of government are paying out a lot of benefits, COVID related, and this may result in inflation in the future. Is the municipal pension plan considering the effects of this on pensions? So just to let you know, inflation doesn't directly affect your pensions. It's based on a formula. So I'm going to ask Judy if there's any other things she wants to add to that comment.
So I guess the board does monitor inflation because, of course, it's important when we're thinking about future cost of living adjustments, when we're thinking about valuing the plan and thinking about how much money needs to come in, and when we're looking at investment returns. So we look at inflation in all of those ways. But as Hilary said, it doesn't have a direct impact on the benefit that is payable to you, which is based upon a formula.
Thank you, Judy. And I will ask you, Judy, to take this next question. Are there plans for additional plan redesign webinars in the future? Today is the first time I've heard of them, so it might be short notice for others in my organization.
Yeah, thank you. So Plan Partners pulled together these presentations in part because of the timing of the AGM and recognizing that members might have questions that are more appropriately directed to the plan partners. So I would say if you are able to attend, by all means, register. If you are not able to attend, but you are interested in a session like this and your plan partner representative isn't already offering Zoom calls or webinars, then I would encourage you to fill out the fillable form that's on the Plan Partners site. So that's at mppredesign.ca. And there is an online fillable form that will allow you to direct a question or a comment to your Plan Partner rep. So if you would like more webinars and you're unable to attend the one on Friday or Monday, I'd suggest that you express your interest that way.
Great, thank you, Judy. So there is another, I'm just looking at the time, and as much as we would love to carry this on for a lot longer, we are limited to a time frame for this AGM being virtual. So I just want to mention that there's, people have asked us, there's been a lot of websites mentioned. We suggest what you do is you go to our website after the AGM, and the AGM information will be posted, as well as all of those websites that we have mentioned. And again, I'm just quickly scrolling through the rest of the questions. Can the province take funds from municipal pension plan in order to cover their bills? My assumption, after being told the short answer is no, that the province could pass legislation that allows them to take money from the pension fund, even if it's limited to overfunded portion as indicated by an actuary. Judy, can I ask you to address this?
So that's an interesting question. I mean, theoretically, you know, the provincial government is able to expropriate lands and pay compensation. It's really a question for our legal counsel whether that's even a remote possibility. I wouldn't want to speculate on the success of such a maneuver. I think it's highly, highly unlikely. I would say that the provincial government was a former trust, was formerly responsible for the plan, and the way the plan is currently structured is I would think in the government's interests. It certainly contributes to the strong credit rating that the provincial government has, which in this environment means that they can borrow funds very cheaply. So I think the possibility of of the provincial government expropriating a surplus is very, very remote.
Thank you, Judy. So I think this is going to wrap up our question session. I would like to tell you that we've answered over 60 questions, which is just wonderful. And we're so pleased that people were able to put in their questions, ask their questions, review and see this AGM. And again, we encourage you to, if you haven't been able to see all of it, we encourage you to go to our website and look at the recording, or if there's questions that you missed, we encourage you to look at the recording. And again, we also encourage you to go to mppredesign.ca and sign up for one of the webinars if you are interested in more of the webinar sessions. So I want to thank everybody for your time. This concludes the 2020 annual general meeting. We're so pleased that so many of you could join us online. Over 1,200 people registered. It's just phenomenal, and I'm so thrilled about that. As I mentioned, a video recording will be available on the plan website under About Us, and that will be coming up in the following days. We invite you to share your thoughts about this meeting. We did get some very positive responses, but if there's anything that you think we can do to improve this, we're always more than happy to hear your feedback. Please send that email to mpbt@pensions.bc. And again, that's mpbt@pensionsbc.ca. And if you have any personal pension questions, please sign in to or register for myaccount.pensionsbc.ca. Again, that's myaccount.pensionsbc.ca. Look for the envelope icon at the top right of the page to send in any questions you have, and you will be contacted with a response. In closing, I want to thank everyone for making this virtual AGM possible. It was a great amount of work for the Secretariat, so I want to have a special kudos and thanks to Shannon Maxwell from our Secretariat office. Without her, we could not have pulled this off, and I thank her very much. And I thank all of the participants. I thank all of our guests. I thank all of our trustees, but most of all, I thank you as members and employers for signing into this AGM this year. Thank you very much. Stay safe, and see you all next year at the AGM on October 14th, 2021.